When you transfer your real estate property, you may be subject to transfer taxes and other taxes as well. And you'll also need to know how to properly transfer your property. I'll walk you through all these things in this video, so stick around. I'm Ted Sutton, and this is Direct Answers from Corporate Direct. Now, before we get started, please make sure to like, subscribe, and leave a comment if you have any general questions about anything. This video topic comes to us from Outlander330cc because he commented on one of my videos. Outlander330cc asked, "How do I transfer property from a C Corp to an LLC?" Thanks, Outlander. So the first thing to know about property transfers is that you need to properly transfer title from yourself to either the other person or the other entity. When you transfer title, you're going to need to prepare a deed and file it with the county office. This is usually done in the county recorder's office, but it may vary by jurisdiction. When you transfer title, the grantor is the person who sells the property and transfers the title, and the grantee is the buyer who receives the title from you. And if you need help with these services, there are other services out there that can help prepare deeds for you. Another important thing to know is the types of deeds that are out there. Many of the deeds vary by state, but what type of deed that you use is very important when you transfer property. The first type of deed is called the warranty deed, and this deed is preferable because it offers the most protection. If you're a buyer and you receive title to the property via a warranty deed, you can sue the seller for any title defects, not only for the time that the seller owned the property, but you can also sue the seller for any title defects that happened before they owned the property. Warranty deeds are preferred because they offer the most title protection for buyers. The next type of deed is called the grant deed. And with this deed, if you're the buyer and you receive title to the property, you can sue the seller for any title defects. However, you can only sue them for title defects that arose during the time that the seller owned the property. So it does offer the buyer some protection, but it doesn't offer them nearly as much protection as a warranty deed does. And the last type of deed is called the quitclaim deed. And what a quitclaim deed does is it says that the seller gives to the buyer whatever title they have in the property, if they had any. And the big issue with the quitclaim deed is that if the buyer receives title to the property, they can't bring any claim against the seller for any title defects whatsoever. And because of this, it's best to just stay away from them completely. If you're the buyer, you have no protection with a quitclaim deed. If you're transferring title of your property from one entity or person to another entity or person, we recommend using either a grant deed or a warranty deed. Using these deeds is important because both the title and the title insurance passes from the seller to the buyer. However, if you use a quitclaim deed, title transfers to the buyer, but the title insurance is severed. When the title insurance is severed, the buyer has no protection and they can't sue the seller for any defects on the property. So we recommend staying away from quitclaim deeds altogether. Another thing to know about title transfers is the tax consequences associated with them. If you hold title to a property in a C Corp and you transfer that title out of the C Corp, you're likely going to have to pay tax on that transfer. I did a video titled 3 Reasons to Never Hold Real Estate in a C Corp. Click the link in the description below to watch it. So when you transfer title from a C Corp into another entity, it's treated as a taxable event and you're likely going to have to pay capital gains on that. I would recommend double checking with a CPA to discuss your specific situation with them if you hold title to a property in a C Corp. Anyway, if you hold title to a property in a C Corp, most likely you're going to have to pay tax on it. Another type of tax that you need to know about is called the transfer tax. And these transfer taxes apply when you transfer title from either yourself or an entity you own to another person or entity. There can be transfer taxes at both the state level and the local level. For example, One notable state that has a transfer tax is Pennsylvania. The state transfer tax in Pennsylvania is 1% of the sale price. However, many local Pennsylvania jurisdictions have a transfer tax of their own, and this transfer tax can range from 1 to 3% of the sale price. So if you transfer title of a property in Pennsylvania, you could pay north of 4% of a transfer tax of the sale price when you transfer your property. So if you own a property in Pennsylvania, you could potentially pay upwards of a 4% transfer tax on the sale price. Another recent example of a local jurisdiction that passed a new transfer tax is the city of Los Angeles, and this one is pretty extreme. If you own a property that's worth more than $5 million in the city of LA and you transfer title to it, you need to pay a tax of 4% of the sale price. Let's say you lived in LA and you own a property worth $6 million. And let's say you were to sell that property. If you sold that property, you'd have to pay $240,000 to the city of LA. And this tax gets even higher if you own a property worth more than $10 million. Let's say that you owned a property in LA worth $12 million and you were to sell it. If you were to sell that, you'd pay $660,000 to the city of LA. If you transfer property from one entity to another, or from yourself to a buyer, it can be done, but you may face additional taxes depending on your specific circumstance. Another thing is that when you transfer title of the property, make sure that you're using a warranty deed or a grant deed. And on top of that, beware of those transfer taxes that may apply in your jurisdiction. I'll see you next time. Hold on, I'm not done yet. If you're looking to start a business, click the link in the description below and schedule a free 15-minute consultation with us. Also, make sure to check out the Corporate Direct website and subscribe to our newsletter, where we'll send you a lot of good information on corporate law amongst other things. And as always, make sure to like, subscribe, and leave a comment if you have any general questions about anything. I'll see you next time.